All right, let's get a picture on what's going on both with equities but also in currency and fixed income at this point. To do that, we're joined by Pete McGuire from XM. Pete, a very good Monday morning to you. So, just picking up on that point there that the market's now pricing in a 75% chance of a 75 basis point next month for the Fed. And as I said there, that was despite that commentary we heard last week from Jerome Powell saying, no, we're not going to expect such a large hike, 50 at most.
Absolutely, Andrew. Well, yeah, do you believe central bankers? There's the first point. The market's got its own interpretation. Think where we are as far as what's the velocity of that US dollar index. Now it's sitting at around 104. Are we heading back to 2001, 2002 numbers? We've seen the euro wipe out 7% in 4 months. So yeah, the volatility has just been incredible, and interest rates, the ratcheting up. And if Jerome was to hit a 75, I think you'd be off to the races for US dollar index. That'd just push it up, 1 or 2% within a matter of hours.
Yeah, let's take a look at currencies there. As you say, obviously we're seeing that support there for the US dollar as a result. How's that judged by the performance of other major currencies at this point?
Well, euro, as we mentioned, Andrew, we've had a 105. We're under 105. What we saw last week was just an incredible wipeout as far as euro. We've got yen sitting at 130.56. You've got the Aussie dollar back in the 70 handle. So yeah, everything's coming under massive firepower to the downside, and US dollar just continues to ratchet up. Nasdaq wipes out 25% in 4 months, and the overall momentum has been, one-way traffic as far as currency traders. They're rubbing their hands with glee. It's been an incredible start to the year. The first 4 months were nothing short of incredible.
Yeah, you mentioned the euro across the channel there. The Bank of England, of course, raising rates again last week. And another 5 hikes expected? How's this playing out, particularly as far as sterling's concerned?
Well, you got a 123 handle, Andrew. So, we put our mind back. Weren't that long ago. It was at 136, 137. And we're talking 140, break that and pushing up further. And now it's moving all the way down to 123. There's a big chance you're going to see a 120 handle broken very, very quickly. I wouldn't be surprised for that to take out sometime in June. So, yeah, the overall wipeout or softness as far as pound has been dramatic. And no doubt the economic situation, 5 rate rises on the forecast for the BOE, and what impact that's going to have to overall growth. I think it's going to be a shaky British Isles come fourth quarter, Andrew.
All right, you mentioned the Aussie dollar there. It has tumbled most recently. How much of that is the China story at this point? Because we take a look at China at the moment. In fact, the Chinese Politburo over the weekend reaffirming its zero COVID policy, which would indicate those harsh lockdowns are going to continue. That will obviously impact the economy and more broadly demand for goods, obviously, that Australia ships in that direction. So what sort of outlook are we seeing?
Well, I think it's be further softness, supply chains, all of the logistic issues associated with, shutting down an enormous economy like China's. And you've got 400 million or 450 million people living in their apartments. So yes, it's bleak. And if this was to continue over the next, say, 6 weeks to 10 weeks over that summer period, then I think that would really push the Aussie maybe down to a 68 handle. You could see even further softness for that Kiwi. It's sitting at 64. You might see a 62 handle on that, Andrew. So yeah, the overall softness, it's going to have an impact naturally to our equity markets, and the final 2 quarters of the year could be very interesting.
All right, we are getting some more data out of China this week. In fact, we've got both consumer and producer prices. What's the expectation there?
Yes. Well, I'm looking at the numbers. I'm not interested in surprises. We're just holding onto the wheel very tightly and realising that if they do come out if they overshoot on their expectations, then it's going to be a good sign for us as far as traders. I think it's going to be choppy. I think it's going to add, again, more volatility. I'm looking at the Chinese equities. I'm looking across Asia and a basket of them. And general softness across many of those equity markets. You've got an election in Philippines. You've got a fair bit of moving, dynamic moving. So I think it's going to create quite some excitement across equities and certainly currencies in the short run.
All right, and Pete, just taking a look at where the bond market is at the moment, the US 10 pushing well above 3% now. So and
Yeah.
that, of course, is way ahead where we were expecting it, I guess, just a few months ago.
Well, exactly right, Andrew. We're at 3.1%. You've got the 2 year sitting at 2.7. So it's ratcheting up. No one expected it to be above 3, and here we are at 3.1, and the momentum is to the upside. So you might hit it to 3.2 sometime over the next month. Certainly with the expectation that if Jerome Powell was to hit a 75, then I think it'd just, really, it's off to the races. So yeah, bond markets, what impact it's going to have to equities again, and certainly to the currency market. So yeah, the next leading up to Christmas, it's going to be one of keep your hands on the wheel, and there's a lot of money to be made if you're prudent with your trading strategies.